Are you concerned with estate taxes? Do you know what estate taxes are? Did you even know you might have to pay taxes on your wealth after you die? Allow me to explain and provide a potential solution to avoid them, especially for all you richy riches out there. First off, if you're not rich yet, stick around. This information will be helpful for you too. Secondly, what does being rich even mean? It's relative, or is it? The federal estate tax exemption is currently $12.92 million per person. This means that an individual can transfer up to $12.92 million to their heirs or beneficiaries at death without incurring federal estate tax. For married couples, the exemption is effectively doubled to $25.84 million, as each spouse is entitled to their own exemption. I think it's safe to assume that if you have over $25 million, you're rich. But are you happy? Another video for another time. Don't tune out yet if you're not even close to those numbers. Here's why. Here is a fake person who has $3 million right now. See in the description of the video the other assumptions made here. They're not that important, but I have to for compliance. I just want to show you what $3 million can potentially grow to over time. You might be well below the exemption now, but will you be in the future? More importantly, the exemption is set to sunset or expire on December 31st, 2025 under current law. This means that the exemption amount will revert to its pre-2018 level, which was $5 million per person adjusted for inflation. So if the current law holds, the exemption will get cut in half. My question for you, would you like your wealth to go to your family or to the government? If you would prefer your family, let's talk about how a SLAT can help you pass more to them. What is a SLAT? It is a type of irrevocable trust that allows a married couple to transfer assets into it while still retaining access to it. How can this be, especially with an irrevocable trust? Here's how a SLAT works. One spouse transfers assets into it. The trust is then managed by a trustee, the other spouse. Said differently, one spouse is transferring assets into a trust that the other spouse can be the trustee on. Thus, you both have access to the trust. Just don't get divorced. Why would you do this? Why would you want to go through the hassle? To get assets out of your estate to avoid federal estate tax. By transferring assets to the trust, you are reducing the size of your estate, which is subject to the federal estate tax upon death. To be clear, there are many ways to get assets out of your estate over your lifetime. Here's why you might want to specifically consider a SLAT before the end of 2025. Remember the estate tax exemption I was talking about at the beginning? I'll repeat myself. It is currently set to sunset at the end of 2025 and get cut in half. A SLAT can allow you to utilize the full $12.92 million exemption before it gets cut in half. Here's a simple but powerful example. Let's assume you have $12.92 million in an investment account to really drive home the point here. Scenario 1, you move the full amount into a SLAT now. You take advantage of the full $12.92 million exemption before it gets cut in half, removing it from your estate, all future growth as well, while continuing to access the investment while alive. You and your spouse tragically die in 2026. Sad. But your posterity's sadness quickly turns into admiration when they find out the full $12.92 million plus any growth comfortably nestled in your SLAT passes to them tax-free. Scenario 2, you don't do anything for the next few years. You and your spouse tragically die in 2026. Also sad. Guess what? It gets even sadder. Roughly half of your $12.92 million investment account plus any growth is subject to federal estate taxes. The sadness of your posterity amplified when they find out they have to pay 40% tax on at least $5 million of the $12.92 million. Quick disclosure, this is an estimate. The federal estate tax brackets are marginal, with anything over $1 million being taxed at 40% in 2023. That's for you, compliance. 40% tax on a conservative $5 million estimate is $2 million. Posterity or taxes? Your posterity will thank me. There's a lot of nuance with advanced estate planning like SLATs. I'm not sure a SLAT is the right estate planning solution for you, but now you know a little bit more about it. If you have further questions, let's talk. See link in the description below. Until next time. Always engaged with that's a disclosure. Waiting, it's going slow. If you would prefer your family, let's talk about them. No, we're not talking about your family. Let's talk about a SLAT.